This conference will now be recorded.
Okay. So in the previous session, we did the returns. Basically, we did one scenario. We will do one more scenario in the returns. Basically, in the returns, our process is to process the returns, what have happened. There are two types of returns. One is called bank returns. Another is basically the customer payment return. Bank return means bank is debiting some amount to us. Okay. That is because of certain transaction. That's the bank return. But the check return is basically processed where the consumer has paid the amount for a debit entry for the open item, and we actually received the payment through the check. Okay. But after the check was sent for clearing, we found that the check was dishonored by the issuing bank because of the technical reasons. Maybe the check number is the check signature is not matching, or date has been put incorrectly, or there could be amount shortage in the balance of the account holder. There could be many reasons. Okay. But the particular bank, our bank, house bank, which actually used the check for clearing, is going to debit us some charges for the return processing. Okay. Because they have done some activity for which they have to be paid the money. So naturally they will actually debit the amount to us. But that is the amount we want to pass it on. We want to pass it on to contract account because the check was dishonored because of the some kind of missing thing from the client, from the consumer. Okay. So legally that amount you have to collect from the customer. Of course, in some cases, if you want to maintain the business relationship, you may say, okay, we will not waiver it. But usually it's a legal requirement. Where the check is dishonored, you must intimate the consumer. Because let us say consumer doesn't pay us again the amount after many months. Legally, when you go tomorrow, we can always produce a document. The check was dishonored and we have processed it, intimated the consumer, and then in writing we have also charged some amount to consumer so that it become a important valid document legally. Okay. That's the reason the return processing has to be communicated to the consumer in the form of a debit invoice. Okay. Now, apart from the return amount what you're charging to consumer, you may also charge some additional amount from the company itself. Okay. Let us say as far as the bank is concerned, we are having the bank charges as on a scale basis. What are the charges? Okay. If the amount is up to 2000 rupees, then 200 rupees is the charge. If it is 4000 up to 4000, it is 300 or whatever the value. If it is 6000 and above, it is 500. If it is 10,000 and above, it is 700. So you have maintained the graduated scale here. This is for the bank charges. But over and above, we may apply around 200 rupees as the our own charges to contract account, or 300 as the contract account. What is the maximum difference you will allow? Okay. So this information also we are maintaining. In the previous session, we had not maintained. So let me show it to you where it is maintained. Based on that, we will see how the returns will be processed. And the return clearing account is not determined correctly. We have to enter. That's one thing I had forgotten. When you do the check lot payment, or when you do, let's say, cash payment lot or credit card payment lot, the bank clearing account is determined on the initial screen itself. Okay. But in this variant, that field is not there. So we cannot have the field maintained, but it will be maintained in the actual data entry when you do it. Okay. So let us go to return processing and then select here financial accounting new, and then contract accounts receivable and payable, business transactions, returns. Configure the return reasons. We have defined one return reason as Z50 and have added the house bank here. Okay, previously you created without house bank. That means there can be return reason applicable to all the house banks. Okay, usually the company will have banking with one banker, but sometimes there can be more than one bank. Okay, That means we have accounts with the Standard Chartered Bank, we have got with the HDFC, we have got the SBI. Okay, three banks are there for the particular company, and the checks can be deposited in any of the bank. Okay, so depending on that, we can maintain the return reasons for each house bank. But suppose if you don't specifically maintain for a house bank, then it is applicable to all the banks. Okay, it is applicable to all the banks. So I just modified the data here saying we have maintained a house bank CURTN1. There is a bank key which is assigned to our house bank. If you remember, we created our house bank as Access Bank. For that, house bank key is CURT1. The return type is check return by the house bank, return activities. Okay. Default days is 3, pass charges on, and then calculated graduated charge. Pass the charges on means whatever the bank is charging us, that amount we are passing on to contract account. Post the charges statistically. Okay. That means the charge what you want to collect from the consumer is posted statistically. It is not reflected as an open item, but when the incoming payment entry happens, we can account for the charges as well. Okay. Then calculate the graduated charge. And default days is 3. Now, default days will be applicable only if the dates are today or later, not historical. Okay. Suppose we prepare one invoice today and then we post the incoming invoice. Let us say itself we come to know the check has been dishonored. Okay. Then the default date can push to 3 days. Okay. That means amount customer has to pay in next 3 days or 4 days, depending on the default days. And then we have maintained the return charges. We have maintained return charges as for 2000. If the check is up to 2000 rupees, it is 200. If it is up to, if the check value is 10,000 and above, it will be at the rate of 800. Okay. So we have maintained the graduated charges here. Now here we are maintaining automatic charge determination. Okay. Maximum difference is 500. What is the maximum difference here? The return amount, the new return amount, what is given by the bank, okay, minus the original payment should be equal to or less than 500. Okay, that means we can add our own charges up to 500 rupees. Suppose the check value is 10,000. Okay, I can make it as 10,300. That means 300 rupees is the charges levied by utility company plus 800 rupees the charges by the bank. Okay, so total amount consumer has to pay will be 1100 rupees. Okay, so the difference should not be more than 500. That means we can enter a return amount which is more than the original amount by maximum 500. That means it is permissible up to only 500, not more than that. Okay, that's the meaning. So let us do one return processing and see how these are calculated. Now let me create one new contract account. We can have the fresh debits, then you can more easily visualize. CAA2. Let me find out an existing contract account for company code group, that is 555. We got a business partner 226. For this 5101 is the contract account. So contract account for the company code group 555. So our business partner is 226. For 226, we'll prepare one new contract account. So go to CAA1, business partner 226. Our ID for account is 50, and then we will use one of the reference contract account. The reference contract account is, let us say, 5101, or you can select any of this contract account 5201. So you have maintained all the data. It is a tolerance group, clearing category, then our payment terms immediately from the date of posting, account determination ID, standard bank and the company code group, dunning and correspondence. Dunning also you can maintain Z5 and then save it. So new contract account 6203 has been created. Okay. For 6203, let me debit the contract account with a FICA document for the sundry posting 6203. So let me go to prepare FPE1. Let us say we posted invoice today. Document date is this, and then document type is Z50, that is 50. Currency INR, and our reconciliation key is some value KL01. Company code is 555. BP item is Z, it is 50, and then create the open item. So our contract account is here, that is 6203, and our main transaction is 5000, sub transaction 5001, amount is 10,000 rupees. So posting period is already closed. Yeah. Now, so far we were able to post to GL account without any issue, but now our posting periods have changed. We have entered into new year. So naturally, you have to open the periods for the company code posting, GL account posting. So you can go to OB52, maintain the posting period variant. Our posting will happen now in the year 2020. You can keep all the 20 periods open. Okay, that means I can post in January, February, March without having to open every month. I'll maintain all the 12 months of posting for 2020. My current year is going to be 2020 for all the GL accounts. But all these are not necessary us because we are not using any material account or anything. But you may be posting some materials also in the operation, material, customer, vendors. But most important is the reconciliation account. So we are maintaining 2020 for the V category contract accounts. Okay, now save it. That means posting can happen in January, February, March till December it is open. Now save it. Now we can go and do the fresh posting, FP1. So document type is 50, reconciliation key, and then open item, contract account, main transaction, sub transaction, amount is 10,000, and then save it. So a document has been posted as 90033. 90033 is our figure document. And if you go to FPL9, you can see a debit entry for this particular value, that is 10,000. This is a debit entry. Now customer made the payment through the check. So either you can enter the check lot or you can enter it as a check in the cash desk. So company code is 555, account is 6203. 6203. Value date, you can put it as 05/01/2020. That means value will be realized on or before 5th. Okay. And then our reconciliation key, we can maintain KL01, currency INR, and amount cleared by the customer is check payment, and then it is 10,000 rupees. We are clearing basically 10,000 rupees open item, and we have to enter the check number. Okay, check number is, let us say, 1133. Okay, just for easy remembering, I'm entering check number 133. Bank number, we can select the bank number for the country India, from which bank they have given. These are so many banks available, so you can select any of the bank. Let's say 999. Bank number is 999. Bank account, okay, is some number. Bank country India, and then clear, post payment. So our check number is 1133. Okay, continue. Our check number is 1133. Okay. Now we will, payment is cleared. So if you go to FPL9, okay, and then see open item, there's no open item because it has been cleared. If you select all the items, you can see the clearing document. Okay. So initial document was 90033. It has been cleared through payment entry 91039. Payment amount is 10,000. The balance is 0. Okay. Now the particular check got dishonored, so you are going to make the return posting. Okay. So go to contract account receivable and payable, go to the account, and then we can go to payments and then go to return lot. Okay. We go to the returns and returns lot. Return lot is, let us say, R2020, and then create -1, create the lot. This will be our reconciliation key. Okay, returns, company code 555. Company code is 555. Document type is AB. Reconciliation key. Return reason, we'll put it as the check returns as ZP1. Ours should be Z50 should come, but that is not coming. So we will enter some additional information. Selection category, check number, and calculate the charges, and bank charges include except the increased bank charges. Okay, that means we are also adding the additional charges to bank charges, and then we go to clearing account. Then here we will enter the house bank. Our house bank is this, and then clearing category comes automatically. Okay, that means depending on the house bank, the clearing category will come automatically. Then line item GL, then go to specifications. Now we will select the return charges, return reason. It's going to be Z50. So first you have to enter and then go to specification, select the return reason. Now Z50 is coming because Z50 is tied down to our house bank. So the moment you enter the house bank and then the corresponding ID, the returns bank clearing account also determined, and then the return for the reason is Z50. And then here in our selection variant, the selection category is check number. So if you enter the check number, it will determine the amount. So now we'll continue and then go to new items. Selection value, C is basically for the check number. Okay. What is the check number which has been dishonored? It is 1133. Now return amount is original payment 10,000, and for this it is determining the charges as 800. Okay. But we want to add some charges from our side also, that is up to maximum 500 permitted. So now I'll make it as 10,200. I'll make it as 10,200. Now automatically what is happening, the bank charge is coming as 200 rupees. Okay, 800 rupees from the original bank charges, 200 is our charge. We are adding the additional bank charge to 200 rupees. So total amount what consumer has to pay will be 1,000 rupees. Okay. So now we are going to basically 10,200. So now save it. So data has been saved. Now we have to close the reconciliation key and then post. Start online. Now posting is made. That means the returns have been posted, and in the control what we have said is payment should be cancelled. That means whatever open document which was cleared, that will be reopened again. Okay. That means we are not making a new fresh FICA document posting, which you have seen last time. This time what you're saying again, we are saying the payment is cancelled. Whatever payment we used, it has been reset. That means it is no more valid. So the open item will reopen again. That means in the open item, we will see again the document 90033. Okay. So if you go to FPL9 and then see the open item, you will see the open item is shown as 10,000. Okay. But it is putting the data as 0201 2020. Okay. Actually, it has to add 3 days, but I don't know why it is not adding. The deferral date has to be added. Okay. But it is still retaining the original date valid from 0201. But here you are not able to see the interest charges. Okay. That is the charges what you are levied, but that is a statistical item. Because you have taken open item, it is not showing the charge item. So if you select here all the items, then you can see all the items. Originally 90033 was the FICA document, which was cleared with 91039. But then the document is reposted again with the 10,000 rupees, that is 62684, and then it is having 1,000 rupees as this is a written amount which is posted. 10,000 is a debit entry, and then 1,000, because original payment is cancelled, it is balancing these two. The fresh FICA document, written document, is debiting the contract account with 10,000 rupees, and this is a charge amount. That means now consumer has to pay 11,000 rupees. That's a debit entry. 1,000 is a statistical amount. So when you go to the payment entry, 11,000 will be the due amount. So if you go to FPCD, company code 555, value date 05. Let's say customer is making by the cash. Why? Because check is dishonored. So we will accept only cash. So we'll say 0201 2020, and the reconciliation key is KL01, cash payment. Continue. Now the contract account is 6203, and then the total item what is payable is 10,000 rupees original amount, 1,000 rupees the return charges. Okay, so totally 11,000 is what customer has to pay. So we will enter 11,000 rupees as the payment and then post. Now payment is posted. That means you are able to determine two charges, one from the company side, one from the bank side. Okay, so this is how returns can be processed. Now, having done the returns, we'll go to next business transaction, that is installment plan. So go to financial accounting, new, contract accounts receivable and payable, and then go to business transactions, and then we will select here the deferral and the installment plan. What is installment plan? Basically, wherever we make an invoice and post to the consumer, the amount becomes the open item. But sometimes what happens for the industrial consumers or commercial consumers, the values will be very high. Okay, in a month it is coming 10,000 or 50,000, 1 lakh. Okay, but sometimes consumer may run into some kind of financial crunch. They are unable to make the payment. Okay, so then in that case, what would happen? The consumer may request for the installment plan. That means we are unable to pay the whole amount in one go. We request you to make us, the installment plan. That means 1 lakh amount what you have to pay, we'll pay in installment. Instead of paying at once, we'll pay in installment. Okay. But then how many installments you want to create? What should be the amount? Okay. So that installment plan has to be determined. For that, you have to maintain the configuration. Whether you want to have 3 installments, 6 installments, or 12 installment, or what is the difference between each installment? Okay, will it be 1 month difference, 2 month difference, and how much will be the charge you want to levy? Okay, because you are processing the installment, the company also has to get some processing amount. Okay, so we will add the extra amount, let's say 1,000, 2,000 rupees. So and that amount will be distributed to all the open items which are created because of the installment plan. So installment plan will enable us to create a plan for the open item broken down into n number of installation items. These are called repetitive items. That means same amount will keep repeating for every period of posting. These are called repetitive posting. Okay. Just like in budget billing, for 11 months, consumer has to pay 7,000 rupees without doing the mid-reading and billing. So consumer will keep on paying 7,000 rupees every month. Okay. Like that here, for the every month, we are going to have the equal amount, but some difference will come because of the rounding or something. The difference can be added to the last installment or the first installment, depending on the configuration. So now let us create one, define default values for the installment plan. Installment plan document type is AB. That is basically the FICA document what is posted. Deactivation reason. At any given point of time, you can deactivate. Okay. Say for example, consumer did not pay first they pay 2 installment correctly. Third payment onwards they are not paying correctly. So we are deactivating. We are asking them again the full payment, okay, balance amount. You can deactivate at any given point of time. Print the payment form, print immediately, display the dialog. So these are the settings we are giving default. Categories of installment plan, okay. Installment plan for the standard payers, installment plan for unreliable payers, payment schema, okay. So let's say 01 we are going to use as the category that is for the standard payers. And then define the installment plan type. We can define our own installment plan type. Let's say we're going to select the new entry. Our installment plan type is Z50 installment plan up to, let's say, 10 lakh rupees, up to 10 lakh rupees. And then IP category, it's going to be installment plan for the standard payers. Installment interval, basically here you specify the length of intervals between the two installment, okay. Now we are going for 6 months, so we can have 1 month difference, okay. Suppose installment plan starts in the this month or from the coming month, okay. Then after 1 month, second installment. That means you are spacing the installment, okay. That means you are not making January, February, March, April, May, June continuously, okay. First plan will happen in January, then nothing in February, then March, okay. It depends on how you want to maintain. So installment plan type, we will say the interval is 1 month. Interval type is months, okay. We are saying installment is months here. And number of installment, we are maintaining it as 6, okay. So currency INR, and then rounding amount, we will say 5, okay. The amount will be rounded to 5. That means if any amounts are coming after distributing the amount, the nearest rounding amount will be 5, okay, multiples of 5, okay. Installment amount, we don't have to enter, it will determine. Charge amount, will say for installment plan up to 10,000, we are going to charge 1,000 rupees as the charge amount. The remaining amount after doing the distributing should be added to the last installment, okay, last installment, and then continue and then save it. So this is how we created. Installment interval will maintain it as 2 months. That means this month and then second month. So we'll maintain it as 2 here. Two and 6. Now Z50 you have created, in which you have put installment interval 2 months, interval type is months, number of installments 6, 5, 1,000. This depends on the company's rule. It may be 1,000, 2,000, we can enter and then save it. After that, define the default value for installment plan charge. This is not required. GB, yeah. Basically, that amount what you're calculating 1,000 will be posted as a statistical item using the document type GB, statistical item. Okay. And then we can go to main transaction, sub transaction, basic functions, postings and documents, document, maintain document assignments, and then define the maintain main transaction. So 080 is for installments. That is the main transaction. And the corresponding sub transaction 80, if you see application area R 0080. So it has got 10 installment receivable, installment plan charges, installment real installment plan charges, payment schema. Okay. So we have got different sub transaction. Assign them to our company code, but not required, because when you copy it from 0001, they have been already copied. So if you go to maintain transactions for billing, and if you see here, our company code is 555, main transaction 0080. So let us see what are the position. 10, see the detail. It is statistical entry R, debit, and then 20, it is G, again debit entry G, and then 30 is the real value. So there is no installment plan charges, and then 555, 90. This will be posted when the payment is released. Okay, payment is received. 90 is for scheme. Anyway, we are not maintaining the scheme. So 10, 20, 30 could be applicable to us. Now we will maintain the account determination for them. Okay. So go to EK01 and see whether main transaction we have to maintain INT. Let me see a model company code AA0080. So 1,45,20, you can copy this and then make our company code 555. ID for account determination is 50 and 80, 1,45,000, and then save it. You can also create a new GL account, but you're using the existing GL account, 1,45,20, and then go to EK02, sub transaction, and then AAA, AA0080. 2030, these are maintained because 10 is sub transaction and 20 is a sub transaction. It's a basically statistical, so it is not having any GL account. 30 is having the GL account. That is a real GL account posting. So we will first copy 20, single copy. Our company code is 555 and it is 50. Do not enter any GL account, save it because it is a statistical entry. Similarly, we'll select the 30 also, main transaction 0080, copy 20. 20 you already copied, so AAA 0080. So 30 we will copy, single copy, 555 and then 50, continue, and our tax determination code is 50 and then save it. Okay. So now we will do a fresh posting into FICA, and then that amount we will say it's going to be determined with the installment plan. Installment plan effectively starting from today's date. Okay. So we'll post one historical FICA document in the last month, FPE1. Let's say 01/12/2019. Document type is 50. Currency. Posting date is 01/11/2019. And reconciliation key, some value. Clearing reason is 12. And then BP item is 50. And then go to open item. So the contract account is 6203, main transaction, sub transaction. Let's say amount is 20,000 rupees and then save it. So new fresh entry has happened to the open item. This is the only open item we have got. All the other payments have been removed. They have been cleared. Okay. So the current open item is going to be basically 20,000 rupees. Now for this, we want to prepare the installment plan. So go to contract account receivable and payable, go to the account and then go to installment plan, create. So business partner 226, we can select the contract account and then contract is not applicable. We are going to select the open item for making the installment plan. Posting date is 02/01/2020. Document type for the installment plan is AB. Document type for charges statistically GB. Reconciliation key KL01. And then we will continue. So this is a document which is overdue actually. Item is due 90034. amount is 20,000. So select this, enter the installment plan category. It is Z50. Starting date we'll put from tomorrow. Let us say it will be due from, let's say 05/01/2020, and installment amount system will determine, and then charge amount is coming 10,000 rupees. We have put 10,000 rupees for up to 1 lakh, 10 lakh. So we have put 1,000 rupees. Category 01, number of installment 6, installment interval 2, interval type is 3, residual amount added to the last installment. Now select the installment plan. So now it is determining 4,330, 3,330. Actually, it is determining equal amounts, but differential amount it is adding for the first installment as 4,330. So basically, it is taking 3,000. If you add up all this value, it will come to 20,000 plus 1,000 rupees added as additional charges. Okay. The total plan is for 21,000. This 21,000 has been divided into certain installment here. Okay. 4,330, 3,330, 3,330 equal amounts. Then it is distributing the differential amount to the first month and the last month. This is in the 05/11/2020. Now we'll come back here and then post it. So continue and then post the installment plan. If you want to make any changes, you can also make it according to your choice. Okay, it is open. Let's say we can make it as 3,500 all the months. Difference you give it to the last month. That means manual adjustment also can be made. Now we can save it. So once you save it, print immediately, no printing, continue. So it will post two documents. 10272, that is the actual installment plan. This is posted. And then 80013. 80013 is basically a statistical document for the charges. Okay. The 1,000 rupees has been posted for 80013. 80013. Actual plan document is posted with 10,272. Now let us go and check these documents. Go to FPE2. The document is statistical document, that is 80013. It is saying we are debiting the contract account with 20, which is a statistical item. So there won't be any GL item. It's only BP item. It is 1,000 rupees. Okay. But this 1,000 rupees is not posted separately to the contract account. It is merged in the installment plan. So actually when you go to the account balance display, this amount will not be shown separately because it is added already in the installment plan. So actual document what you reflect in the contract account will be the second one, that is 10,272. So 10,272. So here we can see use FPR2. We have to use FPR2 for the installment plan. FPR2, that is installment plan what you have created. These are the 4,330, 3,330. These are the amounts. Now come back. Now if you go to EFPL9 and then see, it is showing the open items as repetitive items. Okay, no items because they are all statistical. So go to all the items. In all items, you can see the amounts being shown here as 4,330, 3,350, 3,330, 3,330. So it is showing these items as statistical item. That means the first amount is due from 6th, then second amount is due in the 3rd, because maintaining 2 months gap here. Then in the 5th month, May, then July, and then in September, and then in November, that is 6/11. Okay, so it is showing the 6 amounts with the gap of 2 months. Okay, and the immediate payment will be applicable for 4,330. So if you go to FPCD and then enter the company code, posting date, value date, reconciliation key, and then contract account 6203, select the items. So this is showing here installment plan. These are the repetitive items. So installment plan is there available here. Okay, 1,000 rupees is the charge amount, 20,000 is the due amount, broken down into installment plan. Select the first item and then activate. So you are receiving 4,330 as the amount, 4,330, which is the installment amount, and then post it. So like this, every month the payment will be received. But these installment plan amounts also will be subject to the in future interest calculation or also your dunning. Okay, these items will be applicable for dunning and also applicable for interest charges. So every month due date is there. If the customer does not make the payment by due date, it will be dunning will happen. Again, the dunning procedure will happen. You will send a letter to consumer, insist for the payment, and according to dunning plan, the levels will come and action can be taken. Okay, and also overdue items, you can apply the interest charges. Installment plan amount they are paid after 5 days or 6 days before dunning, then you can also charge the interest charge amount also to open items. So installment plan is basically to basically break down the items into certain plan amounts, and each item will become a statistical open item which has to be made by the payment by the consumer. Okay, so according to the business practice, 6 months, 2 months, 6 month installment, 12 installment, 3 installment, you can define the installment plan type and accordingly you can process them. Okay, this is the process for the installment. Now we will go to another business transaction. Go to IMG, go to financial accounting new, and then contract accounts receivable and payable, business transactions. Now write-offs. Okay, what is write-off? Write-off means actually you are removing